which means when you go out to a builder, they're going to laugh at you and say, we're going to go to the guy who has the $400 a square foot.
Or you're going to write a check.
Yeah.
When you need some advice, never sacrifice, always get it right. Ask the Planman. Finance, insurance, and more.
Hey, everybody. This is Bruce Weinstein, the host of Ask the Planman. How's everybody doing today? Second episode this week. We're going live with my buddy Jimmy Choi. Jimmy's out in California. You may have heard there's some natural disasters that have been going on out there. California is its own epicenter, like Florida, when it comes to the natural disasters. And when the wildfires hit a month or so back, I wrote Jimmy and I'm like, look, I got to get you on the show because I know the whole thing with fire and earthquake, for us, it's hurricanes, but, these big natural disasters are taking a toll on the consumer, on the insurance companies. And that wildfire that recently took place out in California was, I don't even know where it ranks, if not the worst, but the Palisades, the famous people's homes, the everyday people homes, like the devastation was unbelievably tragic. And all I'm thinking from the world of insurance is, what are these people going to do? And my concerns for everybody out there, and again, I'm dealing with it in Florida with the hurricanes and the inability to get insurance. And California is very similar in that sense. So Jimmy's been working on, and you tell it better than it's your business, but Jimmy's started with Allstate a few years back, Allstate being in the auto and home side of things. And then he recognized the problems that the consumer he was dealing with, and that's fire insurance, right? Having wildfire insurance itself. So Jimmy's kind of branched out, for lack of a better word, where he now focuses almost exclusively on coverages and options for people in the fire, right? The wildfire and earthquake space, which is very niche in itself, but problematic, right? Getting it, and that's been a big problem. So, Jimmy, welcome to the show. You've been on before. Thanks for coming back. But, tell me a little bit more, tell our listeners a little bit more about what that all entails, because my concern asking you on at the time was all these people are uninsured and they're losing their $10 and $20 million homes. Now, if I got a $10 and $20 million home, you're liquid enough. But if I've got a $600,000 home with a $400,000 mortgage, I got problems. So let's talk about that. Let's get into a little bit about what led you from the Allstate side into the fire space. And then let's talk about what consumers can do and, what they are doing and how you're helping them.
Yeah. Thanks for having me back, Bruce. Allstate, they chose 10 years ago, actually, a lot further back than what the media outlet has been reporting, that they're not going to take home insurance policies in California, that it was too much of a risk. And that was 10 years ago, right? So they actually only insure about 20% of the zip codes in California. And they utilize smaller companies that they partner with, like an American Modern, a Pacific Specialty, right, to do home insurance policies. But it's not under their books. It's still with the smaller carriers. Well, the problem is, once the fire scores started going up, California started becoming uninsurable. And I had a glut of customers who couldn't get home insurance. And
home insurance at all, not just fire related, but even just baseline home insurance.
Right. Because, a typical HO3 policy, your home insurance policy, includes fire, includes wind, hail, includes liability, right? They don't just cut out the fire portion. When they say, no, we're not taking that zip code because of a high fire score, they just don't sell home insurance, HO3 policies. And when the big guys left, like State Farm and Farmers, said, hey, we're walking, the smaller guys, they got filled up really quick, right? And they were at capacity and they said, okay, we can't take any more either. This is just too much risk on our books because the fire scores are too high. Well,
And go ahead. No, I wanted to just explain a couple of those terminologies, right? So you're basically, what I've shared on the show in the past is the terminology of adverse risk. And so when there's a smoker involved and they need life insurance, the rates are higher, right? When somebody has 5 speeding tickets, 2 accidents, and a DUI, their auto insurance is almost unobtainable, right?
Sure.
It's adverse risk. And so for us in Florida, we're obviously the opposite of you guys we're hurricanes, not necessarily wildfires, but we have our own high level of risk. We too, all the big players have left, or predominantly left, the Florida market because they don't want to cover the wind being the hurricane. And then they've lowered the caps to how much they will cover. They've raised the deductibles, right? And so it's like you have to have like that perfect scenario to actually get paid. You know, and you have the pretense of having insurance. And let's just educate everybody for a second so they understand. If you don't have a mortgage, you don't need homeowners insurance.
You don't.
Right? Like people need to understand, like, if you have a mortgage, and I had this conversation with somebody the other day because her rates went up and she didn't pay the bill and she's like, screw them. And she's trying to find new coverage. And I'm like, do you have a mortgage? And she's like, yes. I'm like, well, you can't not have insurance because you could violate your loan agreement and the bank can repossess your property if they wanted to, or in most cases, they'll go get insurance at any price, anywhere, to cover their end and not yours. They don't care that you can't afford it. It's you owe the bank money and you need to protect the bank's exposure, right?
Yeah.
So we're dealing with that. You're dealing with that. And so again, that marketplace in California, you know, where you're in Malibu in a $15 million house. Well, the person who owns that, similar to some of our properties here in, you know, Boca and Delray that are oceanfront. Well, you know, you got a $20 million house on the beach. You're liquid.
You're very liquid.
You don't have a mortgage. So if it burns down or the hurricane knocks it down, like, but it's still a bad day, don't you think? You think Warren Beatty's happy, you know, that he lost his $15 million mansion? Like, he's going to have to pay cash to rebuild? Like, come on. Like, it doesn't matter how much money you have. It's not a good day, right?
Right. Absolutely. So the typical homeowner who has a $1 million home or less, that's their whole life right there. You know, especially in California, you're talking about 80% of your income goes to your mortgage. So that's their whole life.
Yeah.
And they are uninsured.
It's devastating. I mean, you know, you go back to all the years I've been doing the financial planning, and most people over the years, their home became their biggest asset. Now, with the way the stock market behaves and 401ks and everything else, money's accumulated in other areas. But the home, when you say $1 million home, you know, that used to be the majority for people. Now it's, you know, if you don't have $1 million 401k or investable assets, how are you going to retire? And you know, there's no more pensions. So $1 million home and $1 million portfolio is not getting you too far in today's worlds, especially when, you know, give me a sense, like, what's your average premium, you know, on $1 million home out there? I mean, I got a ballpark here for Florida, but like, what are California rates for a so-called $1 million property? What kind of premiums?
I'll give you two figures. Before COVID kicked in and before we had an outbreak of 3 wildfires in a row, basically from the summers, $1 million home or up to a $600,000 home, you're looking at a home premium of $800 to $1,200, depending on how much coverage you're looking for, right?
Okay.
So it's reasonable. It was reasonable. Now with the fire scores, if you're lucky to still have a policy, you're looking at about $5,000 for that same house.
But still cheap compared to what we got down here.
Right. Well, now the people who has to get a fire policy who none of the carriers will accept has to go through what's called the California Fair Plan. That's the last resort policy,
Okay.
right? And that's kind of that government de facto policy that you have to follow. They only cover fire, wind, and hail. You have to have another separate policy, a difference in condition policy, a DIC policy that covers the rest of it, your liability, any kind of water damage, your pipes bursting. So you have to have two policies. Now, for that same policy that you were, if you had a regular policy, you pay $4,000 or $5,000 for. If you're on a California Fair Plan, you're going to be paying $8,000 to $10,000 for.
Okay, that sounds a little bit more realistic for $1 million home.
Yeah. So now that's the reality of a lot of people, especially in our area, my area right now, where it's the Inland Empire, the Corona, from Rancho Cucamonga down to basically Temecula wine country. It is high fire score because we had a few fires that happened here back to back, right? Back to back summers. Everyone's looking at about $8,000 to $10,000 because every insurance carrier is basically dropping them. The only ones who aren't getting dropped are the ones who's never filed a claim, has it bundled with their auto, right? And they usually have multiple auto, and they usually have an umbrella. Those are what the carriers deem that, hey, we want to keep these guys.
More sticking. Yeah.
Yeah, exactly.
Well, that's what we've told people here is, we've had people, the great migration, right, from COVID, New York, New Jersey, Pennsylvania, flooding South Florida, eastern South Florida. Obviously, the Midwest people maybe go more to the west side of Florida. But regardless, we're bombarded. Prices have doubled and tripled in home values. And then we got the multitude of hurricanes that keep coming through. So it has easily become about a 1% premium to value. So $1 million home, you're easily going to have a $10,000 price tag.
Yeah.
And again, there's a vacuum where carriers have left the market. And so now people get notices. And we've had to tell them, like, look, this carrier will only take you if you give them your auto and an umbrella. And they're like, well, I don't want to pay for an umbrella, or, my auto's already with somebody else.
Yeah.
And it's like, look, if you want to move here, this is the game.
Yeah.
If you want insurance, this is how you're going to get it. You don't want it, you want to self-insure, you got enough money and you don't have a mortgage, then you don't have to comply. But you can't ask them. They don't want one line, one business line, and one revenue stream, because that money has to be spread out, right? The risk has to be spread out. They want the cars and the umbrella and their separate silos of profitability and expenditures. And then people, again, don't understand, like, there's capital reserves that have to come into play and their balance sheets have to look like certain things. So if it's all based on the one risk, then their balance sheet looks like crap. But if we got some over here with auto, we got a bunch over here for umbrella, I think it's different risk. It's a different balance sheet, item, right? So again, we try and educate the consumer by doing the show. And if you don't understand how the stuff works, you don't understand why your rates are going up. And then it's like, I didn't do anything. Well, yeah, but it's not about you. It's about the fundamentals of insurance is it's all our money in a pot.
Right.
Jimmy's money is coming with Brucey's money. And if Jimmy needs it, we're going to give it to Jimmy this year. And then Jimmy's got to refill the pot, and Bruce has got to refill the pot. And now Bruce needs it next year. And Jimmy's got to push the money to Bruce. And so it just multiply that by 1 million people and put all that money in a pot. And then whether it's Allstate or State Farm, whomever, they're managing the money for a modest return at best, and hoping they don't get devastating claims.
Yeah.
like hurricane and earthquake and tsunami and wildfires. And then, of course, the one-off isn't so one-off anymore.
Right. Especially when they're happening every summer.
Right.
Yeah.
So when they forecasted that storm only happening once every 10 years, and now they need to replenish the pot every year, well, rates are only going. So the fact that you had an accident and a claim, you're going to get jammed up anyway, but you could be perfectly unclaim oriented and still get beat up.
Yeah.
And so the California thing, we have Citizens. Do you have Citizens available? Like, that's not a Florida thing, Citizens. That's just, it's a FEMA backed player. Yeah. It's the player of last resort when you can't get something. But, we're not big advocates of using them because of the FEMA backing. And if something catastrophic happens, you're probably not going to get paid all your money. Like, you saw what happened with FEMA in North Carolina, right?
Ours is similar. We have what's called the California Fair Plan. And what happens is all the admitted carriers in California, they're basically going to have to pay prorated versus their market share. So if State Farm has 50% market share, they're going to be paying 50% of that claim, right?
Okay.
And it trickles down. And that's how it works with the California Fair Plan. Now, one of the things most people don't realize about the California Fair Plan is actual cash value versus replacement cost, right? California Fair Plan, when you come to a claim, they will go with an actual cash value. So they'll say your house is worth $1 million, but because it's 30 years old, due to depreciation, this is how much we're going to give you, $600,000. Well, now you got to find a carrier or a home builder who's going to rebuild your home.
Right.
Take that $600,000 and then say, hey, you know what? I'll cover the cost up to $400,000 up to the coverage limit. And then I will go back and do a supplemental charge to California Fair Plan. Good luck finding a home builder who's going to do that. You maybe one, maybe two, right? So, the cost of your rebuild just skyrocketed. You went from having a $275 per square foot rebuild to now $500 a square foot rebuild, right? So
and that's what people don't get. We get a lot of pushback down here when we properly quote and they see a $20,000 premium.
Right.
And then they go, well, so-and-so can get it to me for 10.
Yeah.
And then you're like, well, you understand it's not apples to apples. Like the same thing. You try to explain fair market value versus replacement value. And, it's not going to cost $500 a square foot. I'm in the business. Okay. You're in the business today. You tell me what's going to happen when, and look, I mean, I don't even know the numbers if you do, but like how many homes were technically destroyed last month or January, whenever it was, right? And now, you would expect Home Depot and Lowe's and those types of companies to then pick up major volume of business, right? So maybe you can invest in them for that upswing. But good luck getting crews. How long of a waiting list? Just pick a number. There's 100 homes on the Malibu coast, and everybody there is uber wealthy. They'll pay up.
Oh, yeah.
But there's only so many people to come do the work. So even Goldie Hawn's going to have to wait over Mel Gibson, because there's not 75 home builders that are going to come knocking and all of a sudden have the ability and the access to materials and crews to rebuild 50,000 homes.
Right.
Exactly. And if it takes 3, 6, 9, 12 months, 2 years, A, to get the money from the insurance companies, B, to get somebody you can trust to actually show up and do the work and finish the project. I mean, that's what happens down here all the time is people take deposits and they never come back.
Oh, yeah.
And getting crews down here, or they take on 15 jobs and they work yours 1 hour a week because they're working 15 jobs. Yeah. And so I'm living my buddy is up in Tampa, Armin. He's been living in a rental house for over a year from a storm 2 years ago that destroyed his house up in the Tampa area. Yeah. And then the second storm just came through and I'm like, He goes, well, that neighborhood's being destroyed again. He says, but we're building. He showed me a picture. Like they were building their house elevated, like on stilts. Like they were not going to build a main ground. And he goes, but I got other neighbors that just rebuilt it the way they were, and they just got clobbered again.
Yeah. Yeah.
But my point is, he's still not even in his home. It's over 15 months.
And that's going to be the case. And it's going to be the case for a lot of people here in California with the fires, because their policy, the guy who sold them their policy was trying to sell a policy for a price, and they were purchasing on price versus value. And because of that, they got a $225 a square foot rebuild coverage, which means when you go out to a builder, they're going to laugh at you and say, we're going to go to the guy who has the $400 a square foot.
Or you're going to write a check. And that's like, well, wait a minute. And then they're going to call the insurance company and the insurance agent. And how come I'm not getting my $600,000? And it's like, well, because you only paid for $200,000. Like that's what you bought. And now you need $6. And I heard this great line from a friend of ours, Gina. I'll give her credit. She listens to the show. You get what you don't pay for, Jimmy. Mm-hmm. You get what you don't pay for. And so when people say, how come it's not covering this? And how come it's not covering that? And, oh, well, now you needed it, right? Like you didn't want to pay for it. You don't understand when we're breaking down, like this is proper coverage.
Yeah.
And you don't want to spend the $15,000, and you get a quote from somebody who's selling you, right? They just want their commission today, but it's bad coverage. And they're going to put you in an insurance company that's really not a legitimately going to pay you type of insurance company, right? So, walks like a duck, smells like a duck, but not a duck. and then you try and tell them, it's like, look, we're the people I work with, like you, like people are doing this a long time. Like we understand, like, why aren't you letting us educate you and tell you? And they're just, but look, I get it. You and I are consumers too. Like we have our own stuff. It's gotten expensive. So I understand and I empathize, like, okay, I'm choking on a $20,000 premium. I need to get it down.
Yeah.
Okay. Well, maybe you need to move. Like that's the market. And so if you don't like it and you can't afford it, then your circumstances. I had this lady like 3 years ago. She, Facebook, whatever, found me, called me, and I got her quotes for her homeowners. And again, it's one of those scenarios, Jimmy, where like they just had a big claim for $200,000 from flooding, that the pipe broke, and they got a whole new kitchen and a whole new this and a whole new that in their $2+ million home. And then of course the rates go up. And then she's like incredulous, like, how do people expect, people to afford that? And she went, with let's call it Citizens, right? Like she went somewhere else where we would not put her. Yep. But she had the audacity to say to me, we have 3 homes. How can people afford to pay this kind of insurance? And I'm like, can you say that again slowly, please?
Yeah.
like, are you listening to yourself? I have 3 homes, and you're bitching about how expensive your homeowner's insurance got after you just got paid $250,000 to redo your whole kitchen and flooring and cabinets, and like your insurance paid you. Now your rates are going up and you're balking like, I got to pay more. Oh yeah. You just hit it for $250,000, honey. Like, come on. Like, you just got $250,000 out of them, and they're going to raise your rates by $4,000, and you're going to bitch. Like,
yeah. I mean, I got a story for you that will knock floors off. You remember the Yosemite fires here in California about 2 years ago, maybe 3 years ago. And it was in Merced County. And right before the fires happened, I had a guy who had a Airbnb that he wanted insured and had to go through the California Fair Plan. Well, when I did his quote, I said, look, to get somebody up in there to rebuild your home if a fire came and took your home down, you're going to be needing at least $300 a square feet. This is when 200 was the norm, and you had guys writing it for $185 a square feet, right? And I said 300. So my price was obviously a lot higher. Well, some gal gave him a quote for $200 a square feet. And he said, I'm going to take this one. I said, please feel free to do that because I will not change my quote.
You won't be suing me.
Yeah, I don't. I'm not going to change it. I just ethically, I can't give you that quote. So if you want that quote, you're going to have to go there. Well, after the fires came, he had a total loss. He called me and he says, Jimmy, is there anything you can do? I said, at this point, there's nothing I can do because your policy is locked in with that square footage. He says, is there nothing? We can't change it. Is there somebody you can talk to? I'm not a god. I can't do it. Yeah. So unfortunately, he ended up, worst case scenario, he ended up where California Fair Plan gave him $400,000 for his house. He had an $800,000 loan.
Oh.
He could not get a home builder because the home builders wanted $525 a square feet to rebuild.
Ooh, forget
right?
the $300.
The cheapest he found was $400 in that area and could not get his home rebuilt. So he's stuck with an empty lot with the $400,000 mortgage left.
Gotta still pay it.
Nothing.
Can't live there.
Yeah. And he's got nothing. So he is trying to rebuild something back up there all out of pocket.
They don't get it till it's too late. You can't have a car accident and then call Geico and ask them to insure you. It's insurance, people. I scream about it all the time. It's insurance. You need to be insured before you get sick. you need to buy life insurance before you die. Grandpa's about to die. Can I get him life insurance? No. No. Come on. People just think the insurance companies owe them favors, right? Jimmy, do me a favor. Can you get that bumped up for me now? I'll pay them. No, bro. It doesn't work that way.
I mean,
they took the chance. They made you an offer. You took a chance. You lost.
Yeah,
you lost.
I mean, one of the biggest things is you can't keep buying home insurance in California on price anymore. You got to buy it off the value. And if you can't see that, maybe you might not be a good homeowner candidate. Maybe you should be renting, Yeah.
No, again, you and I are in the crosshairs all the time with this stuff because you're dealing with the consumer and the public and they just don't get it. And we've experienced the other side. And I find in my near 40 years, the best new client, right? Somebody comes to us is somebody who's now had that negative experience, maybe with another family member, maybe it didn't happen to them, but they're cognizant enough to say, I don't want that happening to me.
Mm-hmm.
And now they're motivated to solve that problem regardless of price. They're not price sensitive. They're problem sensitive because they just dealt with it.
Yeah.
And I refer to that in a big case with long-term care insurance for nursing homes. The easiest client I had back in the 90s to do long-term care planning was somebody who just dealt with an elderly parent or family member or just put grandma in the nursing home and they see the shit show and the financial burden and the practicality. And they're like, I don't want that happening to me.
Right.
And so that's an easy sale, right? Write up the order, here, this will take care of that. Okay. I don't care how much it is. Right.
Yeah.
And so I don't have to sell them. It sells itself, right? You're fixing a problem. You're alleviating the pain. But when it comes to this stuff, it's until somebody else suffers a catastrophic loss and here's the Yosemite story, when are they going to wake up and say, well, I don't want that happening to me. I need to be properly covered. And, you and I deal with other professionals, financial advisors, attorneys, accountants. When you deal with estate planning, a lot of these estate planners talk about what? Asset protection. they're protecting your estate from undue attack, whether it's litigious or a black sheep in the family that's getting an inheritance you don't want to give them, or taxation, right? Lawsuits and taxation. So you're going to pay an estate planning attorney to protect your assets. Well, isn't that what your auto and home insurance agent, isn't that what Jimmy, is doing here? Is he's protecting your assets from another vulnerability? Like, that's what we're doing, isn't it? So you'll pay your estate planning attorney to fix and do all these things and the right documentation. And, they could be 10 grand. They could be 5, 10, 20 grand, depending on how extensive. And they could be way more depending on how extensive, right? So, but at the same time, you won't spend $15,000 to insure your $2 million home that's on the water from a hurricane. Like, check the boxes. Like, but look, if I don't have a problem for 10 years, that's $150,000 I just saved, right? And so people look at it that way, like, well, I'll put that money in the bank, or I'll leave it in the stock market, and Apple stock, and it'll make me, and I'll turn that 150 into 300, and and I'll self-insure. Bam, $2 million. Okay, who's writing the check? Sounded good. Until it actually happens. Right. Till what you thought was going to not happen for 15 years happened 15 weeks later. Right. And now you're.
Yeah. I mean, literally, that situation for Yosemite happened in the same summer.
It's crazy. It's just, and we seem to be in an era, let's call it, where the weather and patterns have definitely significantly changed.
Yeah.
And so with that, people have to understand that the insurance companies are taking a step back, and they have to reassess their actuarial tables and their pricing. And, you're seeing it now on the auto side, at least down here. I don't know about you guys, but they could only get so much out of the homeowner market. And now they're going after the auto market. Now, the same storm is going to wipe out cars just as easily as homes, right? How many cars were burned? Everybody was evacuating and running, and if they weren't taking their cars got destroyed, right? And they got, and I'm sure, again, we'll use Malibu as, they're not driving Toyotas, they're driving Range Rovers and Bentleys and like multi-$100,000 cars. So you got $1 million worth of cars. You want to get paid, right? You want your replacement value. You don't want fair market value on a depreciated car. Your $400,000 Rolls Royce, and here's $100,000. Well, Rolls Royce ain't giving you a new one for $100,000.
Exactly.
Right.
Exactly.
So it creates this vacuum. But so I know you pivoted away from the Allstate side, and you're focusing on really just the fire. Yeah. We're recording, we're live here, Facebook and LinkedIn. It's March 6th. This episode will probably come out in about 4 or so weeks. So we'll be into April and May. And the fire was in January, right?
January.
So, we're a couple months removed. So what's happening now? Are people getting paid? What are people doing that didn't have damage? What are happening to their rates or their coverages? I've called you onto the show because you're in it and you got your finger on it. Your clients are due money now, right? If you've had them covered, I don't know how many of your people actually got impacted on the last issue. And then you got plenty of people that are not impacted this time that have to be crapping their pants because they lived a half hour away. And, just by the grace of God, the storm didn't hit that direction, just like us in, Delray and Boca versus Tampa and Naples. The west coast of Florida keeps getting it and the east coast has been saved. But by the grace of God, that 30-mile storm, missed me, right? It went 30 miles that way and just barely missed us. So, the same for you. So what are you telling people? How are you helping people getting their money? What's going on in the inner workings of all of that?
Yeah. I mean, unfortunately, I did have a few customers there as well, too. For the most part, what people are doing is they're getting the payment out from the mortgage, from the insurance carriers. They're paying off the mortgage balance for the ones that did it right. They're getting the mortgage paid off. And then now they're deciding how are they going to go about it? Are they going to rebuild, or are they going to sell the plot of land? There are a lot of vultures out there right now just circling, and they are trying to buy up the plot of land. Initially, they thought they were going to go in there and just buy it on pennies on the dollar, right? At a distress sale. But what's turning out is because that area is such a high value property area, they're trying to sell that property, that plot of land, for more than what it was worth with the home on it.
They're clinging. They're clinging.
Yeah.
Oh yeah. I mean, if you got a $15 million home, like sitting on whatever, in Malibu, let's say, the land is worth $5 million. The home is 10. Like the land's not 15 million, but the land's a good chunk. And that's kind of the argument I get from people on the Florida side is, they live in $10, $20 million homes on the beach, or close. And it's like, well, the house is this, but the land is still a good amount. So I don't need the full value because the land is, again, let's just say it's a third of the value. So I really only need the other 2/3 for the replacement cost. But again, as you said, and I got to tell you, my partner Will down here, he's telling people like $600 to $800 a square foot. So you're talking 3 and 4, and your Yosemite guy came in at 5. So, when he's telling people $600 and $800 a square foot is where he's comfortable for a replacement cost. Well, the rates are, ginormous, right? Like it goes hand in hand. And like you said, so they're balking of like, well, I only need 250 or 300. I'm like, nobody's going to do it for that. Like you're not. So you can do, whatever the math is, 4,000 square foot home at $300 is 1.2 million. And like, okay, but when the builder tells you 2.5, what are you going to do?
Right. Exactly.
Like you said, like now you're coughing up or you're walking away, you're going to sell the land and you're going to move somewhere else. Now, in regards to people getting paid by the insurance company, let's be clear. You're not obligated to rebuild, right? It's your money. It's, you need to figure out a place to live. As you mentioned, they pay off the mortgage. So the obligation's taken care of, but they could still have 400 grand sitting in the bank, but it's going to cost $1 million to build. And now they're stuck. Right. And then again, where are they staying in the meantime? How long is it going to take to have that house physically rebuilt? All their clothes are destroyed, all their personal items, their memories, their photo, like there's so much more destruction behind it. But do you know, is there an actual unit count? Like how many homes were actually destroyed this time? Is there?
They do have that figure. I'm not aware of it, but they do have a very accurate figure on that.
That's like 50,000. Like it was some big, like a 50,000 home.
Well, they're saying this is the single largest wildfire loss in America's history.
Yeah, it was.
So apparently, this is more than the Chicago fire that happened back in the early.
Well, I think just the enormity and the spacing, with the way the winds took it. But
so
again, we're lucky it's not worse, and we're sorry for those who've had to endure. But again, that spectrum of, it's the haves and the have-nots. But we're not crying as much for the $20 million house in Malibu as much as the $500,000 house. That the everyday Joe is living in. And I don't know if you can get a house for $500,000 in that area, but $1 million, whatever it is, statistically, that's going to have a mortgage and that's going to have a bigger problem. And then that family is not as, look, the guy in Malibu, that's not their only home, right? Brad Pitt, his $15 million bungalow is one of 8 or 10 properties he probably has. So he can pick up, get on his jet, go to Vail, go to Napa, come to Florida, go to Colorado Springs. But, the guy that's working at the school, that's driving the school bus that, lives a half hour away, like, where are they going?
Yeah,
And
because the rents are going up as well too. These guys, knowing that, these guys have raised rents. They're supposedly supposedly they put a law out there, putting a cap on it, saying that you can't increase the prices for Airbnbs, hotels, and whatnot. But you know what? It's still happening. It's still happening, and they're paying through the nose.
Right? Money talks, right?
Yeah.
So if 15 people want that unit, I'm putting it on eBay. Bid away.
Yeah, exactly.
Right?
Exactly.
I set the price on Airbnb. There's no auction market, so you need to put it on something that has an auction to it. Let's see where the market really takes us. Let's see where it goes. But no, I'm glad to hear that at least there's a little bit of regulation and protecting that. But no, to your point of like, now rents are going up, demand, cruise, manipulation. There's going to be a lot of crooks out there, and there's going to be a lot of people that are going to get sucked in and given a deposit or hoping they're coming back. And you're going to hear the story. And I've heard the stories from being in Florida now for 10 years. You hear about the catastrophic storms from 30 years ago, 20 years ago, and the amount of people that just got beat, for a deposit, or like, the crews come in and they got all the credentials and then they don't show up. And so anyway, and then what's going to happen is it's going to be material costs.
That's the other one, right? Especially with inflation now. Oh my goodness!
But you had the timber and the wood problem, right, during COVID, and then, as they say, the logistics and the problems. Like, we have, I guess, the Spanish tiles are very popular down here for roofs. They're heavy, they're weighted. They're better for the hurricanes and, some of the others. Well, like, it's a year wait. Like, I know people in construction down here, and they're like, dude, I can't do roofs. Like, everybody needs their roofs redone now because of the insurance costs. And, if you don't have a roof that's younger than a certain amount of years now in Florida, they don't want to cover you.
Over here, it's 10 years now.
it's like 15 here. So people are like, but my roof has a 30-year life expectancy or a 40-year. That's fine, but no, they're not going to cover you, and so you can't get insurance. So now everybody's clamoring to get their roofs redone if they're trying to sell. We have a high retirement community, volume in our region here. People retire to Florida, and so now those homes are turning over, but it's still got wallpaper from 1992 up there. And the original roof and the original bathroom and the builders. And so in 1992 it was great, but 33 years later, the home needs a lot of work, right? So, but that's a $50,000 roof and a year wait for material.
I'm hearing it's doubly so more now because these contractors can't get the materials even more so now because the tariffs kicked in.
Right.
And they're saying because of that, the suppliers are trying to get new countries to get the supplies from, and it's causing extra delays of another 3 to 4 months on top of that.
Yeah.
So you're looking at basically getting your home rebuilt in about 3 to 5 years.
Are the policies you're selling, right, or the policies your clients are getting in combination, is it going to cover them living somewhere else for 2 years on top of, like, when you have a car accident, you can get like 30 days of a loaner car built in, right? So while your car's at the mechanic or the dealer, they'll cover a rental for you for the 30 days. And that might be true for your homeowners. They'll cover you in a hotel for 30 days, right? Like, but are they going to cover you in a hotel for 2 years? Are they going to cover you to move into a rental complex for $3,500 a month? Like, who's covering that stuff? So, all of these other components come into play. And again, the human capacity to deal and cope, because you lost your dog, you lost your wedding album, you lost your kid's baby teeth. Like, all these things you've suffered in the the loss, and now you're displaced. And now, and you and I both, could talk in circles, like the number one reason people get divorced is always financial. So now you're putting this massive financial burden into the family, all because you didn't have the proper coverage or not know what to do or didn't ask the right questions or balked at paying something that your professional was trying to protect you on, right? And so now, the best time for me when I was doing asset management, and you and I both, so people listening, Jimmy and I used to both be in the financial side of wealth management, and so the best times for me to get new clients was after the markets crashed. Because during good markets, everybody's making money. They think it's easy. But when the market crashes and you have to go tell your spouse or significant other, you just lost 30 and 40% of the money, they're going to tell you, knock it off and get professional help. And they're going to hire us. Right? It's like, because you can't afford to make that mistake again. And, he's running it on his own at a Schwab account and Vanguard and the market imploded and, he lost $400,000. Right. So it's the same stuff. And so now you've got this loss, and then that other spouse or significant other partner, whatever, is going to be like, WTF? Like, dude, what'd you do to us? Right?
Yeah. Now we got to work an extra 10 years.
Yeah. Now we got to live. Now we got to live with my parents. And
right.
All of a sudden, you and your mother-in-law are back together. So
yeah.
So don't let that be you, consumer. Don't let that be you.
Yeah.
Jimmy, I love catching up with you. I'm looking at the clock. I know you're on California time and you got to get back to work over there, but I appreciate you jumping on with me. What's the last kind of takeaway, if anything, we can give today's listener, and whether they're California, Florida, or anywhere in between, what's your tales of caution? What's your closing like?
Yeah.
What would you say to them?
I would say my number one pitch would be to take caution with the price on a policy. Purchase on value and not price.
And it's hard, as we said, that's hard. And I agree with you 100%. It's, again, the Ask the Planman. Planman's about being proactive and having a plan. And so in the financial planning world, it starts with budget. And budget is one of those 4-letter words that happens to be 6 letters, but it's a 4-letter word, and it's a dirty word, and nobody wants to be accountable. Nobody likes to be accountable to having a budget. And again, I say nobody. They obviously don't say the word nobody, but in my 39 years of doing this stuff, the amount of people that ever came to me that actually mastered, controlled, and lived by a true budget was 1 out of 1,000. Literally. Like, they had to be that analytic, the engineer, the guy that has the pocket protector, and he knows every nickel of everything and anywhere, and he lives by it and he breathes by it. But that's not the majority of the consumers out there. And so I'm tying in the proactivity of the budget, because what we're talking about and stressing to you is, if you don't have a budget and you're just spending money and now you've got to clamp down, there's committed expenses and there's discretionary expenses, and you can't let your homeowners and your auto and your key insurance pieces be discretionary. It's got to be committed. It's got to be, I have to have this for this reason, because, and you have to work your budget around the downstairs. So I used to do the financial plans a house, and the downstairs was your cash reserve and your insurances. And if you didn't have your foundation properly covered with a proper cash reserve and proper insurance coverages, that could be disability, life insurance, auto, home, health, whatever it is. If you didn't have that, then you didn't go upstairs. And upstairs is where you saved. Upstairs is where you invested. Upstairs is where you bought real estate. And so if you didn't take care of the foundation, you can't move upstairs. Why? Because if you're only upstairs and you don't have the foundation, what happens to the house? It's going to topple over, right? It's going to collapse. So you had to build your house on a key core foundation. And I'll drive it back in. You need a goddamn budget. You need to own your budget. You need to know this is what comes in. This is what has to go out. And then this is what I have left over. And so if you don't know your numbers and you don't know your cash flow and you got a $2,000 rate increase on your homeowners, where's that $2,000 coming from? And now you're going to call Jimmy crying, cut my coverage. I can't pay another $2,000. Yeah. I get it all the time. My car insurance is $450 a month. How much? $450 a month. They just doubled my rates. Okay, we're going to give up your car? Like, what are you going to do?
Stop getting speeding tickets.
I don't want to. I had a client. I won't say a he or a she, but between the type of car they were paying, what had happened, his rates. Oh, I said his. Sorry, her rates. Their rates went to it was $1,000 a month.
Oh, geez.
$1,000 a month. And I'm like, and obviously they were unhappy, and I said, well, what kind of car? And I get the VIN number and I price it and I get them, quotes or whatever. And, it's a high end car. It's a sports car and lives in an area that would maybe be deemed more city oriented versus suburbs.
Okay. Yeah.
So my point simply is, dude, for the kind of money you're spending on the car, on the insurance, like just Uber for the next 6 months, sell the car, put the car in storage, sell the car, I wouldn't spend $1,000. Like, how many Ubers can you get for $1,000 a month?
Yeah.
And just stay off the road, get rid of the car, Uber it, let your rates come down, let the demerits that you've accumulated, because obviously he had issues that jacked his rates. I said, let that time go by and then go revisit it after 6 or 12 months. But he just paid $1,000 a month. Like, okay, wow. If I got to pay $1,000, I'm like $12,000 to insure one car.
Yeah.
But again, in this case, the person had the money.
He was liquid. Yeah.
So again, that's a choice. You and I might say, I'm not spending $1,000. Like, get rid of the car. I'm gonna Uber my ass all over town. Like, that ain't a bad way to go, right? How much work can you and I get if we're sitting in the back seat versus driving? Does your wife like to drive? Because my wife never wants to drive. So,
yeah, there's, take a limo at that point.
Right.
Yeah.
So listen, we're going to sum it up. You get what you don't pay for. You get what you don't pay for. So you don't want to be inadvertently negatively impacting your vulnerabilities, your assets, what are you buying the insurance for? You need to think about, you need to assess, and you need a catastrophic plan, right? You really need to think about, or you can't say anymore, it won't happen to us.
Yeah.
You can't be that ignorant bystander, ostrich in the sand. Like, you have to have a plan man, and you need to have that contingency of, if the worst case happened, what does that do to us? And where are we in that capacity of capability of replacing and doing and paying for and self-insuring, if you will? And then if you can't, in all good consciousness, then you need to make sure the insurance is at the levels. Look, insurance is passing the burden to somebody else. If you don't pass it to somebody else, it's still your burden. Yeah. So you're buying insurance to get rid of the burden and the exposure, and you're hoping and you're praying that it's going to work when the time comes, as you anticipated. But as Jimmy alluded to in one of his client stories, like, the guy didn't want to pay for $300. He bought it for $200, and then when it hit the fan, it was $500. So even Jimmy's $300 wasn't enough at the end of the day, and the guy didn't want to pay for the $300. Right? Yeah. And now they're homeless. They're living in Tent City.
Right. Or with his mother-in-law.
Well, That might not be better than a tent. I don't know. We're not here to bash mother-in-laws. All 6 of my mother-in-laws were all great people. No, I don't. 6.
Jeez.
No. One was enough. One was enough. So anyway, great conversation. Thank you so much, Jimmy. Give a shout out. How can people reach you if they want to get some help, talk to you, get some guidance? I know I've referred some people out to you, out there, but, they can come to me and I could always turn them on to you. But tell everybody how people can get a hold of you, best way to communicate with you if they want to talk to you about their situations out west.
Yeah, no, best way to call is just to call me. Give me a call on my mobile number, 951-283-7811, or go to my website and contact me, choiandcompany.com.
Thank you. I appreciate it. We'll put it in the show notes when the episode drops. But folks, we've been doing a live episode with my buddy Jimmy here. We've been talking about the problems, the stigmas, the elevated costs, but all these challenges that we're facing. It's going to continue. Jimmy pointed out changes now with the tariffs that are going to be kicking in and adding more problems for us in the world of auto and home insurance. Obviously, we cover all these different areas on the show, Ask the Planman. So, life, health, disability, long-term care. But the whole point is have a budget, have a plan, know your numbers, know your exposure. Don't cut corners. You're going to pay the price one way or the other. Pay me now, pay me later. There's value and there's price. You got to make sure you're properly covered and protect yourselves. All right. So, Jimmy, thanks for being with us today, folks. I had the pleasure of having Jimmy with me today. So thank you so much. If you need some advice, always get it right. Hit us up at asktheplanman.com. Give me a call at 844-PLANMAN. I'm your host, Bruce Weinstein. Until next time, thank you, Jimmy, for being with us.
Thanks, Bruce.
When you